Diving into the world of ETFs, one has continued to stand out to me, and that's TSLY, the Yield Max TSLA Option Income Strategy ETF. But why? Why do I keep coming back to this? And more importantly, why do I see it all over Twitter or X? Why do I see it on YouTube? Why do I see other content creators making videos about this? I think there's one reason and one reason only. Because it's back-ended by Tesla. Because you're trading Tesla options, you're looking at Tesla, the underlying equity of Tesla. But more importantly, let's go into why that's so interesting and is this the right option for you? Don't forget to smash the like button, leave me a comment, and don't forget to subscribe. All right, so a brief introduction into what is TSLY. So TSLY is the Yield Max Tesla option income strategy. Talked about that before. We've talked about what an option strategy is. Really, you're just selling covered calls in order to make monthly or quarterly income, as well as appreciation on the stock. One thing you'll notice here is the 74% distribution rate. What does that mean? A 74% distribution rate for this ETF means they're paying out 74% of the income they're bringing in, and a 30-day yield of 3.9%. Now, the first thing that this says here on their website, on the Yield Max ETF website, which I'll link below, is they do not invest directly in Tesla. I want you to stop and think about that. They do not directly invest in Tesla. So when you buy this ETF, we'll get into the expense ratios, we'll get into all the financials in a minute, but you do not own Tesla. This is a fund, will hold Tesla in the ETF, but you do not own Tesla. They're simply using it to they're holding it and they're selling call options on it and they're hoping to get appreciation on it. But this is not something where you're actually holding the underlying equity, which I thought was very interesting. If you look here, they'll even tell you on the website, it involves a degree of risk. The fund strategy will cap its potential gains if Tesla shares increase in value. That's another big one. The fund will cap its potential gains. Well, how do you cap potential gains, and why would they cap gains? Well, it actually makes a lot of sense. Number one, they're going to have to, if utilizing call options, they're going to have to be prepared to sell the underlying equity. What does that mean? It means that if they buy a call, option and the strike price is say 10 and it goes up to 20, whoever purchased that has the option to buy the stock at 10 or whatever it's trading at, today. I just made those numbers up. But they'll be forced to exercise that call option, and the purchaser of that option will be able to exercise their right to buy it at $10 even though the stock is at 20. Now they'll still collect the premium from the options contract, but the potential upside will be capped. I think you're probably better off potentially just buying Tesla and letting that run, but we'll see in just a minute. Let's move over to let's look at the ETF here, etf.com. I'll link this below. Love this site. I think they do a great job breaking things down. It'll talk to you about here, the analysis and the insight. It provide current income and capped gains on the Tesla stock through a synthetic covered call option, which I just went over, collateralized by cash and some treasuries. They do own some treasuries in there. It uses both standard, exchanged, and flexed options. Real quick, the expense ratio is almost 100 basis points. So almost 1%, basically it's 1%. If you're going to pay 1% as an expense ratio, your yield better be more than 3.9%, because you're paying 1% to the manager of the fund. So now you're down to 2.9%. I just don't see, I don't see the performance here, and I don't see the big draw when I can easily go out and get 5.5% to 6% for just parking my money and doing nothing. I digress. The performance here has been actually very interesting. It's only been on the market a very short time. So November 23 of 22, we barely have 15 months of data on this thing. And so far, it's just completely, crashed and burned. Let me see if I think I have a price here. Yeah, here we go. So there's a chart, and I'll make sure to paste this down below. There's the chart here. The chart here shows that we've got a options income strategy that continues to go down and to the right, which is not where you want. So if you look here, what does this mean? This means that this is the net asset value of the underlying option here, where we started out at 0, it went up again, it went up, and this looks like February of 23, so almost a year ago. And then since then, it's just went completely oops, completely down and to the right. So it hasn't done well is what I'm saying. I don't know that it could recover. I just think it's important to understand that you're buying an ETF that doesn't have a long track record, that's got a very high expense ratio, and that's not yielding you more than you could get in a money market fund while holding an underlying equity that is extremely volatile. I'll say that again. Tesla is an extremely volatile stock. Last week when they announced their earnings, their stock went down, I think it was 20 or 30 points within one day on a $200 something stock. It's just something to be aware of. Okay. Let's look at the distribution schedule. So they distribute, here's the 2024 distribution schedule for covered call ETFs. Basically every single month they're distributing, you can look out. So basically at the beginning week of every single month, you're getting a distribution. But let's actually dive just a little bit deeper. So I'm going to go down here, and here again, this is on their website, their fund data. They've got about 767 million in assets. The net asset value today is 896. And I believe going back a few years, we were at, let's go 365. Yeah, they peaked around $17. So it's been cut in half. It's been cut in half since they went public. The fund inception, yeah, it's 1122. Again, expense ratio, and the 30-day blended SEC yield is 3.9. I don't know that this is going to yield the performance that a lot of my viewers and a lot of you are looking for the rate of, for the expense ratio, but then 2, for the volatility, and 3, for the fact that you are, again, capping your gains on what you can do. Let's go down here. Most of this is held in... Most of these, like I said, are just options contracts. They do have a little bit of treasuries down here to help blend it off. I actually did put together a couple different reports or a couple different screens here to go over with you. So if you're interested, this is the price distribution of the Tesla ETF securities. Basically, the price is down here, the frequency's up here. The price here has basically most of the time stayed around this $10 mark. If I go over here, this is a little grainy, but here's the securities breakdown. Most of their options contracts are treasuries, and the value distribution among the holdings is basically held a lot of it into treasury, at least at the market value. Here's the market value by security type. Most are treasuries, and then portfolio weighting by security type is also by treasuries. Here's also a breakdown of options, or the securities versus options written. And I thought this was interesting. Here's their actual data from their website, the Yield Max Option Income Strategy. What this looks like, if anyone's interested, I'll link it down. I'll link it down below. And then there's also a ton of different ETFs that they sell. So not just Tesla, they've got some for almost every major stock. So we've got Apple, Nvidia, Amazon, Google, Netflix. Any of these that you're interested, they actually sell. They have ETFs that they sell where they will, again, sell the covered call option on the underlying asset in order to gain premium income, while again capping gains on those, because if a options contract becomes valid and they have to sell the underlying equity, your underlying position has now been evacuated. So what do I think? What do I think about TSLA as of today? I think it can be a very good option for those that are interested in a newer ETF that may or may not pan out. I think there's a lot of risk around it. I think the expense ratio, I think the dividend yield, I think that there's just not a long enough track record, and I think you're probably better off just buying Tesla. Again, I'm not against options contracts. I'm not against any of that when it makes sense. But given the volatility of Tesla, given the expense ratio and how high it is, I just don't know that it makes a whole hell of a lot of sense. Now let's go back to the let's actually look on the Yield Max chart here. The last thing I want to go over is what are some different options that you could go with. So let's say you don't like TSLY. What are some other ones? If I actually go back to the front page of ETF.com, which again I think they do a great job, I can immediately look up, and I want to say some of the other ones, some of the other ETFs. They're looking at TSL versus TSLY, VTI versus TSLY. SPY. I think really any of these are as good or better. Well, I think most of these are better than what you could get from TSLY, given again the expense ratio, the volatility, and the cap of gains as the underlying equity continues to appreciate. If I look at something just like a VTI from Vanguard, once this loads, we'll go through. But I believe you're getting a lower expense ratio, you're getting a better generalized return with less volatility and a longer track record. So when it loads here, we'll actually see that, this is VTI. So VTI, again, I understand it's not an apples to apples conversation, but if you look here at the expense ratio and we look at the number of holdings, we look at the daily volume, and we look at the assets under management, just the expense ratio alone would be something that would scare me away. And then I also have predictive performance from something like a VTI, as well as I don't have an entire concentrated position in treasuries and in Tesla calls. So just something to be aware of. There's tons of other ETFs if you're looking for an alternative, whether you like what Tesla is, the option income strategy. If you're looking for something else, an SCHD, a JEPI, a DGRO, which I've made videos of. I'll make sure to link those up here. Any of those are more, I think, a better fit for a lot of people, even given someone who has a very explosive and heavily weighted ability to take on risk. So with that being said, let me know, are you investing in TSLY? Do you like it? What do you like? If you do, if you don't like it, let me know. Leave a comment down below, and don't forget to design your financial freedom. Take care. Bye-bye.